We are basically a hydrocarbon-based economy here in the UAE. That's where most of our wealth comes from. So it seems logical that we should have an energy-based futures exchange. The Dubai Mercantile Exchange was established a few years ago to try and create a market. It was sort of groundbreaking when it was first started, and it's come a long time now. It's been open for about 7 or 8 years. And we're very delighted now to have the reasonably new CEO of the DME, the Dubai Mercantile Exchange, in the studio, Christopher Fix. Good morning to you. Thanks very much for being with us.
Thank you so much for having me. It's nice to meet you and Brandy, so it's a pleasure to be here.
Thank you. Now, the exchange has done really well. I mean, your 2012 figures up 33% over your 2011 figures, and your volumes at the moment are stellar. What's caused the huge rise now?
Well, one of the things we wanted to do when I first joined in August was to re-engage the market. Go out and see what your customers are looking for, what types of things are changing, how you can become more relevant in the space that you're in, and that's paid off. We did 100 customer visits between August and the end of December, and a lot of the things the clients were saying were listen, we need to have an alternative to Brent and to WTI, which are the other two benchmarks. We need to see a more friendly type of engagement with the exchange in terms of customer visits, talking about what you're doing, and the markets responded beautifully. Yesterday we had a 10,000 lot day, which, to put in perspective, when I joined in August, we were just doing around under 4,000. We did 10,000 yesterday, so the market's really paying attention to us.
That's huge. And are they all in the Oman contract?
Yes, we have the OQD contract, which is the physically delivered crude oil from Oman, and that's the only contract we currently have.
I know you want to make the Oman contract a global player, but it's not really being quoted yet alongside WTI and Brent. Why is that?
I think that what you have is that the market itself is starting to acknowledge the relevance of the East on East story. You being in Dubai are very familiar, of course, with the growth in the region and how China plays a huge role in the economies of South Asia and Southeast Asia. But this is something that's really becoming more relevant in the West. And that's where you're going to see the quotes for the energy price benchmarks. But we intend to be there shortly.
Christopher, what's actually been happening, though, to drive up those volumes? I mean, you sort of said that the customers you've been speaking to want a friendly relationship with the exchange, that sort of thing. But in practical terms, what has actually happened to make those lots almost double then, if that's what you're talking about?
Two things. Firstly is the change in strategy at the DME. I mean, my predecessors really had sort of a unilateral strategy of let's bring the NOCs on, let's wait for one of the big producers in the region to change their pricing. I don't think that's the key. I think that what the key is to build a better market, the one that you have, which is to concentrate on getting more liquidity down the curve, which is to concentrate on the fundamentals of getting the bid-offer spread in, which is really important in terms of the dynamics of the traders who are looking at the screen and what their interests are, not the long-term strategic interests for things you can't frankly control. And the market has responded because on the desks in London and Singapore is small real estate for the screen, which is going to have your product on it. If you're not in front of them and getting those guys to pay attention to you, then you're not really going to build your volumes.
How many Oman contracts are actually going to physical delivery now?
Well, we deliver between 10 and 15 million barrels a month, which makes us by far the largest physical delivery exchange in the world.
Your delivery point somewhere on the East Coast, isn't it? Or?
It's in Min Al Fahal, which is Muscat, which is outside the Straits.
Muscat, yeah.
So that's significant, obviously, with tensions in the region. And also, OPEC is not involved because Oman is not a member of OPEC with any type of destination restrictions.
Is that the difference, why you don't have a Saudi crude or a Kuwaiti crude? They're OPEC members and the Oman is not. Is that why?
I wouldn't say that's the difference. I think that as those markets mature in terms of price discovery, where you see where these guys can get the best value for their oil, that they're realizing that the exchange-based model is the best one.
So what would need to happen? What do you think would be the tipping point to get one of those big contracts, to get a Saudi pricing or a Kuwaiti pricing, to change that model and bring it onto your exchange?
For me, it's really about building the best possible exchange you can and establishing the most stable platform. Yeah, they're watching, but I don't think that you want to go and pester potential customers. You want to let them see the development, make their own decisions, and just have more volume, better pricing, and that's what I'm concentrating on. I do believe that they will come because we do have a better model. We are better.
How many members has the exchange got now?
We have had over 100 players trade on the exchange, but consistently it's between 50 to 60 who come in every day and trade.
How you did have a tie-up at one point with the CME for the clearing, and I think for the clearing, which was transferred from NYMEX. Is that still the case? You're clearing through and doing everything through Chicago, trading on the Globex platform?
That's correct. And Malcolm, in February of this year, the CME came in and took a 50% stake in the DME, which obviously they bought the NYMEX back in 2006, I believe. And then they came in and they then brought a bigger piece of the exchange in 2012. So then their influence and their ability to help us market and their global distribution has also played a part in us increasing our volumes.
Yeah, I can remember the conference when that was announced, that the CME with Chicago was upping its investment in the exchange here in Dubai. So was the Oman Investment Fund. Both players were increasing their stake in the DME. What difference has that made to the DME and how it runs?
Well, it makes a big difference because, of course, I'm from the States, and it was really a major part for me to come over and to see that the world's largest exchange was taking a strategic long-term interest in the only exchange in the Middle East that handles oil, of course, the largest production region on the planet, facing the fastest-growing customer dynamic, really made a formula for me that said this is gonna win. But in terms of marketing efforts, in terms of global distribution, in terms of systems, in terms of the solid financial background that you have from the powerhouse of the CME, it gives confidence to your customers that their funds are going to be well treated and that the systems that they use are going to support them.
Well, you've opened up an office in Singapore, first Asian office in the last couple of months. Are we going to see more following that? What's the plan there?
Well, the first part for me is always addressing the client. I lived in China. I speak Chinese, and I did a lot of work on the mainland before I came over here from my base in Singapore. And I know that the Chinese customers need that kind of backup support that any client does. So we have a Mandarin speaker in Singapore that'll cover that market. 40% of our crude goes to China on a monthly basis, and therefore I'm hoping that we'll increase business with the largest consumer of oil on this side of the planet.
Well, looking forward for the year, oil prices widely predicted this year to stay flat or even drop a little bit. It's perhaps not the ideal environment for creating a need to hedge on an exchange if you've got flat pricing. What are you expecting from the year in terms of traded volumes?
Well, I think that when you look at the price, it's really about which benchmark contract makes the most sense for your business. Those other two rivals don't actually match. First of all, the physical crude from the Middle East, which is a medium sour grade, unlike either West Texas or Brent, which is a light grade, and also the environment and the place we're in. So I think we're going to see big growth. It doesn't matter about the price. It matters about how relevant the businesses are that are forming their prices based on East of Suez trading volumes.
And Christopher Fex is the CEO of the Dubai Mercantile Exchange, the DME. Thank you very much for coming in and joining us this morning.